Imagine being able to own a fraction of a multi-million-dollar property, a stake in a famous piece of art, or even a portion of a private jet without ever leaving your home. This isn't science fiction, it's the power of asset tokenization, a technological breakthrough that's set to reshape the way we think about ownership and investment forever. Hi, my name is Lamia, and in this video I'll explain what real-world assets tokenization is, how it works, and why it's quickly becoming one of the most significant trends shaping the future of finance. Let's dive in. So let's start by explaining what real-world asset means. Asset tokenization is the process of converting ownership rights of real-world assets like real estate, art, or even commodities into digital token on a blockchain. Think of these tokens as a small piece of a big pie. Instead of needing millions to buy an entire skyscraper, you can own just a slice of it. This is making high-value investment more accessible to everyday people, while also improving the way we buy, sell, and trade these assets. This isn't just theory, it's happening now. Back in 2018, New York East Village saw its first attempt at tokenized real estate. Developers of the 13 estates and West project used blockchain to sell fractions of the condos. While the project didn't take off, it paved the way for the tokenization platform we see today. For example, platforms like Lofty now let you invest in real properties for as little as $50. What's unique about that is that these properties are governed by DAOs, which stands for Decentralized Autonomous Organizations. This means every token holder has a say in decisions like hiring a property manager or funding repairs. Another example is Vesta Equity, which helps homeowners tap into their home equity by tokenizing it instead of taking out loans. You can sell a portion of your home's equity as a token to investors. It's a win-win. You get access to cash without going into debt, and the investor benefits from the future appreciation of the property. Big players are also jumping into this space. In 2024, BlackRock, led by CEO Larry Fink, launched a tokenized money market fund, blending traditional finance with blockchain technology. Fink himself has called tokenization the next generation for markets will be tokenization of securities. And believe it or not, it will democratize access to investment on the global scale.
I believe the next generation for markets, the next generation for securities will be tokenization of securities.
Meanwhile, Visa is enabling banks to issue fiat-backed token, as MasterCard is working with JP Morgan's blockchain platform to enable faster cross-border payment. More recently, Dubai's Damak Group partnered with Mantra to tokenize 1 billion worth of assets, showing how far-reaching this innovation has become. So why is tokenization such a big deal? First, it allows for fractional ownership, meaning you no longer need millions to invest in high-value assets. Even $50 can get you a slice of a property or another valuable asset. Second, it improves liquidity, making it much easier to buy and sell traditionally liquid assets like real estate. Third, blockchain ensures every transaction is recorded and tamper-proof, boosting trust and transaction. Of course, no innovation comes without challenge. Regulatory uncertainties is one of the biggest hurdles. Government and regulators like the SEC are still figuring out how to classify tokenized assets. Are they securities? If so, how should they be taxed and regulated? Technology integration is another challenge. Platforms need to seamlessly integrate with traditional systems, which requires significant effort. And then there are affordability concerns. Some argue that tokenization could drive up real estate price, making it harder for the first-time buyers to enter the market. Currently, companies like Lofty and Vesta Equity are limiting participation to accredited investors by filing under Reg D. Their goal is to eventually expand access to everyone under Reg A+. But question remains about whether tokenized assets are fundamentally different from traditional securities like rates. There's an estimate of 278 trillion worth of real estate globally, and we've only begun to scratch the surface of tokenization's potential. In the next 10 to 15 years, we could see a world where every element of a home, from the property itself to its equity, is tokenized. Imagine a future where investing in a new city, country, or even industry is as simple as buying stocks online. The tokenization of real estate assets isn't just a trend, It's a revolutionary shift that could democratize investments, increasing liquidity, and forecast a more transparent financial ecosystem. But like any innovation, it comes with a challenge. As this technology evolves, it will be fascinating to see how it reshapes industries, impacting communities, and redefines ownership. Let me know in the comment, would you invest in tokenized real estate or assets? What excites you most about this future? And don't forget to like, share, and subscribe for more insights into the fascinating world of crypto and blockchain. See you in the next one.